I am Araceli, a wealth advisor, real estate investor in the United States and Canada, and creator of Wealthy Women in Real Estate. Every week, I meet with Colette, a real estate broker and a real estate investor in Canada. We come together to talk about all things real estate investing and how to increase your wealth. Join us. Welcome, everyone. This is Araceli, Transition Wealth Advisor and real estate investor in the US and Canada. In my chat with Colette, we're having a very interesting subject that is going to become even more popular with people because of the need. And this is about reverse mortgage. So Colette, can you introduce yourself and introduce our guest that is going to talk about this today?
Of course. Hi, everybody. My name is Colette Raba. I am a residential real estate broker with Orion Realty Corporation. I always forget my brokerage. I'm sorry. I am a real estate broker residential in the GTA. So I like to help people anywhere from Etobicoke all the way to Burlington and beyond. If you really like working with me, I might make the exception. Anyway, so our wonderful guest today is Cherryl Small. She is a professional mortgage broker. Am I saying that right? And we love having her on the show because she answers the great questions you guys give to us. We like how she explains things. We think it's wonderful that she's joining us today. So please welcome Cherryl. We're welcoming you. I know we don't have a live audience here that can clap for you.
Thank you. Thanks for having me, ladies. It's always a pleasure to be here. As Colette said, my name is Cherryl Small. I work for Matrix Mortgage Global, which is a brokerage in Toronto, full service brokerage. We actually fund mortgages across Canada, but I am physically located in Mississauga. My brokerage is physically located in Toronto. So we are doing Toronto, GTA, and beyond. So if you have any questions, just give me a call and I'll be happy to help you. So yes, we're talking about reverse mortgages today, right, ladies?
Okay, yeah, that's perfect. So first of all, like for those people who don't know what a reverse mortgage is, can you tell us what that is?
Okay, so a reverse mortgage, your typical mortgage, you are going and you are getting the mortgage on the home that you're purchasing and you are making a monthly payment. So you are paying down your mortgage. So a reverse mortgage, just as the name says, you have a mortgage in your name, because you're still on title, but instead of making that monthly payment, it is only an interest only payment, and that is tacked back on to your mortgage. So it's reverse in the sense that it is not going down, it's actually going up, right? Because that interest payment is being tacked on back to it. So, but as we speak about what that really looks like and what that means, you'll understand, because you may think to yourself, well, why do I want to do that?
Well, if we can do a simple math example. So let's say my house is worth $1 million and what's the minimum age? 65?
55.
55. Ooh, okay. That's even better.
But don't get too excited.
I know, because 55, you're going to live much longer 55, too.
But the reality of a reverse mortgage is that the younger you are, the least money you get. The older you are, the more money you get. And it's an algorithm. It's I plug in, the company plugs in your age, the location of your property, the value of your property, and and then they'll figure out how much you get, basically. And that heavily is on your age.
So let's just say, because I'm still me. Okay, let's just say I'm the example. So make me the example. So let's say I'm 65, I've retired, I have all this equity in my house. My house is worth, let's say, $1 million. And just, roughly speaking, what do you think off the top of your head? I'm in Mississauga. I think my house is nice. What do you think I could have a reverse mortgage I could borrow against my house? Is it 50%?
So I'm just going to use
roughly.
Yeah, I'm just going to use basic numbers because, again, I would need to plug in your location, your house value, and your age. But let's say you have a house that's $1 million, and through the algorithms, I figure out that I can give you $500,000. I can give you half. Let's just use that, just simple math.
Absolutely.
If you happen to have a mortgage on your house right now, that has to be paid off. So let's say you owe RBC $200,000, right? Let's just say we have to pay off RBC, their $200, because the reverse mortgage has to be in first position, has to be
Here.
the first mortgage, right?
Okay.
So
then
we
it
would
looks
pay
like,
off
yeah,
$200,000, and out of the five now, so we
200.
get rid of two. So that leaves you with $300,000.
Right.
So out of that $300,000, you may choose to, you may have some other little debts that you want to clear off, and we clear those all off. And then that takes up another $100,000. Let's just say you had a lot of debts. And then you've got $200,000 left now. Let's say you want to give some of that to your son or daughter, because they're going to be buying a house and you really want to help them now before you pass on. You want to give them that's free. You can do that as well. And then you want to save a little bit of that, and you can actually take your money from the reverse mortgage in one lump sum, or you can take it in draws. And so if you are the person who needs a little extra money each month, you can, well, you wouldn't be doing that monthly because you don't want to do your draws monthly.
Right.
But if you need money, you know that you've got money here that's already been allocated to you that you can tap into when you need it. So that's basically how it would be allocated. But we would figure out according to your age, according to the location, according to your property type, how much money you would be entitled to.
Okay, so now let's say I have all this money, this $500,000 is spent, and I'm, let's say, 70. I've gone crazy and I've traveled and I've spent all this money. So now what happens after all the money is gone? What happens? Does the bank come or the lender come back to say, now it's time you have to sell your house and we have to take our money back? Or when does that happen?
No. So the way a reverse mortgage works is you are never really in a position where you are going to deplete all your equity, simply because they will only allow you to go up to 55% of the value of your home. Okay. So as your house is increasing in value every year, even though there's ebbs and flows, and there'll be ebbs and flows, there'll be ups and downs with the markets, but historically, we know that house prices keep going up. Yeah. So
the banks are very conservative when they actually give you that valuation as well. So even though I think my house is worth $1 million, they might say, no, it's only worth about 900.
We have to have an appraisal done. So we'll know exactly. We're not going by what you say. Yeah, you think it's worth that. That's great, but we're going to do an appraisal. So once we do the appraisal, we're going to know exactly what it's worth. And then the algorithms are going to figure out how much they're going to give to you. And sometimes we can go a little bit higher than that, depending on the scenario. But usually we've got a set amount we would give to you. Now, let's say you went hog wild, you renovated your home, you went traveling, you gave some money here. And now we need a little bit more. Down the road, we need a little bit more money. You can, just like a refinance, you can come back to us and say, okay, how much is my property worth now? I could really use a little bit more to top up now. Can I do that? And the answer is, of course you can. We would look at the numbers. We would look at everything again, and we could give you a little bit more money so that you can do whatever it is you want to do with it, right?
Right.
A lot of people do many different things.
So Cherryl, who do you think this is a good product for? So who's the best candidate for a reverse mortgage?
So I will say this. I'm not here to say a reverse mortgage is for everybody. And I know that a lot of people, reverse mortgage, I don't want to do that. Well, I'm here to say it is good for some people, maybe not for everyone. But if you are retired, or even if you're not retired, you might still have a little part-time work that you do, or a little work that you still do, and you have a little income coming in, but you don't have enough money to really sustain you and the lifestyle that you want. But guess what? You've had this house for eons and it's got a lot of equity in it. And so you think to yourself, okay, I may not have saved as much money as I wanted to along the way. So I don't have the income that I want, or I don't have the savings put aside that I want. But guess what? I bought this house so long ago, I've got a ton of equity in it. Then you can tap into that equity. I think it's great for people like that. There's a lot of people who have so much money, and they're so concerned about leaving all of that money for their family, their kids, or whoever, but they could safely tap into some of that money, use some of it for themselves, and still have more than enough to leave to their family members.
Yeah. Well, and
So
that's the other thing too. The bank doesn't really see what you're doing with the money. So let's say you have $300,000 or 500,000, and then you say, okay, you know what? I would really like to spend it on me aging well. So if you need to spend it on healthcare, if you need to spend it on, yeah,
renovations you might renovate the house so that
exactly,
you can age in place. You might want to put a lift. You might want to build something onto the back of the house.
For your comfort, age in place. I know I'm a real estate agent. I never want to displace anyone and say you have to sell your house. I always try and find opportunities to say maybe a reverse mortgage. At the beginning, I was not a big fan of reverse mortgage because it has such a bad connotation in the past.
And that is, let me just say, because of the association to what happened in the United States.
Yes.
These are Canadian banks. We are not regulated the same. It is not the same scenario. You can't compare the two.
Yeah, you're heavily regulated in Canada. You are safe to have this mortgage. Everything is spelled out and explained to you. I understand with seniors, a lot of the times they don't understand, or they might have hearing issues that they don't want to say that they have hearing issues, but they kind of say, yeah, I know. You have to have the right mortgage broker to sit down with you, explain everything. That's why we love Cherryl, because she's a very kind and gentle person to actually go through this with you, to say, do you understand this? What else is there somebody else to explain it to too? Because
I always involve the family.
Yes, if you have to explain it to the kids or other relatives, they should all be in the room together so they absolutely understand what you want to do with your property. It's your property. You can. And
I think if the family members understand that,
100%.
There's more than enough. We're trying to help your parents. Your parents need a little bit of a help.
They don't want to be a burden. They don't want to be a burden to their kids. At least tap into this equity to say, here, you know what, whatever is left over, you will get when I'm in the grave, but at least let me live. You want me to stay healthy and happy. Let me live my days out in this property, and you know what, do what you want with it.
Some seniors are very agile and active. They want to travel. Absolutely. They want to enjoy life. They want to do things. They're not ready for the grave just yet. They're still.
This is what I was going to say, Cherryl, that now, because of the advancements in medicine, with all the things that we have available, people are living longer.
Yes.
And according to, retirement, when you're planning for it, sometimes you don't put enough money, or there's something happened along the way. Any transition in life, you get divorced, you lost your job, something happened that it kind of stops that growth of money, and you have to tap into it early on. Some people don't have a lot of money sometimes in the end to fund all those things that they want to do, because now we're healthy. We want to do activities, and the activities cost money. Right? Travel costs money. So all of these things, right?
I also have clients who have taken the money to buy a cottage, for instance, if they wanted to be away. I've had someone buy a home in like a condo in the Caribbean.
Yeah,
or go back and forth. They were going to go back and forth sometimes. Right. So it all depends. There's so many scenarios, but I think one of the main thing is for people who want to age in place. They're comfortable in their home and they want to remain in that home. And so they may bring in staff to help them, or they may retrofit their home and they need money to pay for that.
Well, so the other scenario too is, so let's say somebody decides that they want to have a reverse mortgage, but then they want to sell their house, let's say in 5 years from now, because it is too much, their health has declined, whatever happens along the way. how does that work out? Do you talk
Okay.
to the lender and say,
Well, usually my clients call me first, so we have a
okay, good,
conversation and we
of
talk
course.
about that. So
Good.
what happens is that just like any mortgage, the reverse mortgage, if you sign up, let's say you're in a term and the term is for a length of time. If you come out of that early, so let's say you just get into this reverse mortgage and a year or two into it, you decide you want to come out of it. You can. You will have to get if you want to keep the house, like let's say a family member wants to keep that house,
Sure.
you're either that family member is going to take over that property. They have to go and get a conventional mortgage, a traditional mortgage at any bank. They get their money, they pay off the money that's owed to the reverse mortgage, and then the house is now theirs. They can do whatever they want. But that money that's owed for the reverse mortgage has to be paid off. Whether you are selling the home, whether you are moving to another location, whether you're moving to somewhere where, as you told me, it's assisted living, whether you go to something like that, it is, the money has to be paid off.
Yeah.
Okay, that's fair. And then if, let's say, they have a 5-year term, is that even a possibility? Like, what are the terms?
Yeah. So what happens is when you get into the term, it's sort of reassessed after a certain amount of time, and the rates may change a little bit, but you don't have to reapply each time for that. You don't have to reapply after, like, say, maybe a 5-year term.
Right.
It will automatically sort of roll over, but
it's also good. Yeah. So what I'm getting at is to say, okay, if I decide I like the idea of a reverse mortgage, but I'm not sure if I want to sell my house in a few years, then it's easier for you, whoever is doing it, to say, I would like maybe a 3-year term or a 5-year term. That's all possible.
Well, you don't really have to go into like saying the terms. They actually always give you a longer term, but what'll happen is it'll in the contract, it kind of states, if you break this within year 1 or year 2, there's a calculation, just like any other bank, there's a calculation for penalty.
I see.
If you are in this after 3 years, then we don't have to worry about a larger penalty. It'll just be a 3-month interest penalty, just like any bank. If you're in it for 5 years, there's no penalty at all. So very generally to any other mortgage.
You're looking at 5, 10, 15 terms.
Yeah, so they'll just they just sort of renew it. Like you don't have to go back in.
I just don't like penalties.
So I would say, so just to make it simplified, you're not really going in to renew each year. Like it'll roll over, they'll roll over. But you know in your head, if you're going to come out of this at any time, try to do that, like say maybe after 3 years. Because after 3 years, it's only a 3-month interest penalty. After 5 years, there's no penalty at all. So I would say try to avoid doing that before 3 years. Year 1 and year 2, you will have a substantial penalty.
Of course, same thing with a traditional mortgage.
Yeah, exactly.
People, like, don't freak out. Let's just make a plan. That's what Araceli is here for her to help you make the plan, to say, okay, in the next 5 years, this is what we're going to do. This is how much you need to live. The reverse mortgage can work for you this way, but don't go crazy and, buy a Maserati. So
No, we don't want to
be fine then, right?
Yeah. That's a very good point. People really need to plan, and you need to plan for the long term in order to make the best decision and avoid any penalties whatsoever in anything that you're doing. And another question here for you, and remember, guys, please subscribe to the channel so we can bring more questions.
Yes, ask your question. Yeah.
So the question for me is, are there any payments on a reverse mortgage that somebody has to pay as soon as you put the mortgage in?
That's a great question. So no, you don't have to make a monthly payment. Now, so remember, it's an interest payment. So that interest payment, you can pay it if you wish, or portions of it. But that to me sort of defeats the purpose of what we're doing here. So the big benefit of a reverse mortgage is to give you the break of not paying that monthly payment. And so you can utilize that money to do something else with, whatever it is you need to pay other bills, whatever. You don't have to make that monthly payment, but you get to stay in the house that you love. So, but there are people who they want the lump sum of the reverse mortgage, but they don't want the interest charges tacking on as much. So they may make a payment, but I don't see most people doing that really, because it defeats it. If I'm coming to you because I really need money and I need to lighten my load each month, I'm not going to worry about making that payment. So although it's there, it's not something that most people would do.
Right, but I can also see how, for example, if somebody takes the money and they buy an income property and they're getting income coming in that exceeds what they need per month to live, let's say, they can take that money and put it back into the reverse mortgage.
Absolutely, because that
Balances it,
reduces
yeah.
the interest. That reduces
Of
the
course.
interest, right? So over time, but like I said, most people don't come to me because that's what they're doing, but certainly you have that option.
Sure.
Yeah.
Yeah. Just that there's lots of scenarios. That's all we're saying. Yeah.
Mhm.
Yeah, so that's
Okay.
why it's important to talk to the experts, because they will walk you through any possibility or option that could be available to your specific situation. And that's what it's all about, to get you the best scenario for you, because everybody is completely different. Now,
Absolutely.
would you have to have good credit in order to qualify for this, for the reverse mortgage?
Now, because we're dealing with a lot of seniors who don't have, much of an income coming in, and so credit is not something that they're focused on. So you're not going to be declined because you've got poor credit. Because we do have some seniors that have some debt and that do have poor credit. It does happen. But no, we're not going to say we're not dealing with you, or we're not giving you this reverse mortgage because you've got poor credit. So that's
credit is not as important here, because
not
they're
as
looking at
important.
the equity, right?
Not as important. But I will say this as well too. You didn't ask this question, but I want to sort of tie it together. When you get a reverse mortgage, you have to also understand that because you're not making a monthly payment, interest rates are not going to be exactly the same as if you had a job and you went to get a traditional mortgage. You will not qualify for that traditional mortgage. And this is a mortgage where someone is allowing you to take all this money without a monthly payment. Usually you're older, and usually, there's a lot more risk involved. So the interest rates are a little bit higher, and that all will depend on, just like we're seeing now, interest rates are a little bit higher for everyone. And this is no exception.
Oh, this is
Makes sense. Yeah,
know.
absolutely.
So many little things. So if you think that you are in that kind of situation, or you're basically struggling, but you're retired and you don't know, or you want to stay in your home, but it has a lot of equity, it would be worth to have a chat with either one of us. And then, just if you're qualifying, just first of all, make a plan of what you want to do, right? Discuss the options. Maybe you want to sell. That's something that you want to discuss with Colette. Also talk to your family about what is this, circumstances around your property. And if you think that you're going to be needing a reverse mortgage, you definitely need to talk to Cherryl about what your options are. And we're here to support in any way possible, right? To give you the best option for you, because moving forward, having a good life and having less stress because you're not, worried about your mortgage is the best way to go. So thank you so much, Cherryl, as always, for giving us your wisdom about mortgages.
Thank you so much for having me today.
Yeah, thank
Ladies,
you so much, Colette, for being here as well, and contributing to the chat. So please remember to subscribe and ask us more questions so we can give you more value. So thank you so much, and we'll see you in the next one. Bye,
Thanks
guys.
For joining us. Bye.
Take care.
Thank you for being here on the show. Please remember to subscribe and hit the notification bell to get notified when there are more shows available. And if you would like to have more information on how to start investing in real estate, please visit my website at www.aracelyhernandez.com. Thank you.